let's talk about how these cues will impact our own markets. We have our research team joining in to tell you just that. What's the trade setup looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Let me go across to you first up, Ekta. The big news has come by. What are the other market cues we are watching out for?
Thanks for that. Well, yes, the big news is that the US House has passed the debt ceiling. The US futures have recovered as we speak, and Asia is mostly higher at this point in time, possibly reacting to that relief which has come through. SGX still indicating a bit of a soft start. Now, for yesterday, the markets did snap their 4-day winning streak ahead of the GDP data. There was a decline that we saw in financials. One of the other reasons because of that, one was the uncertainty from the US with regards to the debt ceiling, but the other one was the China manufacturing activity, which contracted faster than expected with the PMI at 48.8 versus 49.2 in April. However, on a larger picture, the momentum seems to be intact for our markets as FIIs continue to buy. The GDP data was better than expectations. So FIIs have bought for the 9th session consecutively. It is probably some of the highest buy figures that we've seen in the past couple of weeks. FIIs net bought around 3,405 crores. DIIs net sold around 2,500 odd crores. Now Q4 FY23 GDP better than expectations at 6.1%. Our poll was 5.1% for Q4. For FY23, we've closed the year better than RBI estimates at 7.2%. Even the A8 core industries data, which is basically the core data for the month of April, was at 3.5%. Flattish on a month-on-month basis, and the fiscal deficit, we've met that for FY23 at 6.4%. Now, the macros seem okay, and talking about the macros, one additional point will probably be crude oil, which is better on Chinese data, weak Chinese data, stronger dollar as well. So Brent crude, the last time I checked, was between $72 to $73 per barrel. So with the debt ceiling out of the way, the markets will now concentrate on the jobs report. The May non-farm payrolls data will be out on Friday. So that's probably going to determine the Fed's trajectory going forward. And that's going to be the next cue to watch out for.
Okay, that's a lot of global cues, and of course they'll impact our markets as well. Thank you, Ekta, for that. Let's talk about some stocks that will be in focus today. Surbhi is joining us with that list. Surbhi.
So I have a few stocks on my radar. The first one is Coal India. The government plans to sell 3% stake via an offer for sale. The floor price for this offer for sale is pegged at 225 rupees per share. Next is Laurus Labs. The company acquires additional 7% stake in immuno-adaptive cell therapy for 80 crores. With this, their stake will increase to 34%. South Indian Bank, the board approved the panel of candidates for the position of MD and CEO, and this will be now sent to RBI for approval. MOIL, the company increases prices for some of their manganese ore grades by 10%. Rainbow Children Medicare, the company appointed Vikas Maheshwari as the CFO following the resignation of R. Gauri Sangar effective 1st of June, that is today. And apart from this, auto companies will be in focus as their monthly sales data is out today.
Okay, all right. That's a lot of stocks in focus. All right. Thank you, Surbhi, for that. Let's talk about the F&O space. Nigel is joining us with all the update from there. Hey, Nigel, morning.
Well, morning, Sonal. Yesterday we had a bit of a down day, but it appears the key reason out there was unwinding of long positions, because both on the Nifty as well as the Nifty Bank, the Nifty more, there was some unwinding of positions close to 6.5% of the total open interest percentage. What did the FIs do in the F&O market? Well, they unwound long positions. Close to 18,000 contracts were unbound from the FIs, and they added some mild short positioning. Keep in mind, they continue to remain net long on the index with around 54% of their positioning, but at least you're getting some shorts in the system. It always is good when there are some shorts in the system in case they get trapped on the wrong side. For the time being, we're enjoying the big institutional flows, but you like some shorts in the system. On the buying side, they bought both calls as well as puts in yesterday's trading session. But what's telling you that at higher levels, you're going to see some resistance is the way they're writing calls. More than 1.5 lakh call contracts were written out there, telling you that the bears, they're going to come in to fight at around that 18,600, 18,650 odd. Now, we made this point a couple of sessions ago that the PCR had moved to the upper end of the band. Good to see that it's come sub 1. Remember, normally bottoms out at around 0.7. So as we speak, it's in the midway mark on the PCR. What caused this? Well, yesterday there was call writing, as I said. More than a crore shares at around 18,600, 18,500 call. Aggressive writing being seen out there. And on the downside, the 18,500 put as well did see some writing. So you plug the numbers out there, look at the 18,500 put, The rough premium yesterday was around 50 rupees. So you're getting a bit of a support zone. On the upside, resistance comes in at around 18,650 odd. The Nifty Bank, that's going to be important. The 44,200 call was very active yesterday, which gives you a broad sense that yesterday we bounced off the lows. So that becomes important at around 43,800. That 43,700, 43,800 mark becomes important because the 20 DMA in yesterday's low comes in at that mark. SGX Nifty is suggesting a pullback of around 60 points odd. I think now 50 points. If you get a little bigger pullback, then maybe keeping 18,450 on the Nifty as a stop loss, maybe risk reward could favor you. Expiry day, so anything can happen. Back to you.
Okay, anything can happen Thursdays, right? Thank you, Nigel, Surbi and Ekta for joining us and prepping us up for this trading day ahead. It's time to slip into a short break. When we return, 7.2% in FY23, 6.1% in fourth quarter. This is the GDP growth data. We'll get you more analysis on the other side. Stay tuned.